Hi there, welcome to Kneppy Invest. On the ASX, there are a wide range of different size companies on the ASX, ranging from BHP with a market cap of almost $200 billion to a plethora of companies with a market cap of less than $10 million. And without knowing exactly how many, I'd say the majority of those small cap, or you might even argue with me, micro cap companies, mining exploring companies that are going nowhere fast. And if you went through all those companies with a market cap less than $10 million, not many would be operating cash flow positive in the December quarter. But there was definitely one, and that company was Harris Technology, the focus of today's video. This company is an e-commerce business. They sell a wide range of IT products for small and medium businesses in Australia. This company has actually been owned by some fairly big hitters, and we'll talk about that in a few slides. They also mention here in their About Harris Technology section, if you want to have a look at that, just go to the Appendix 4C and go halfway through it. They talk about what the business does. Just mentions here, they no longer operate any physical shop fronts. This is a purely e-commerce business. They have their own website, and they also have major online platforms, or they sell their products also on major online platforms such as Amazon, Kogan, Catch, and eBay. Harris Technology was founded in 1986 by Ron Harris. And through the last 30 years, 35 years or so, Harris Technology has been owned by Coles Myers, Officeworks, and between 1999 and 2015 by Wesfarmers. And Wesfarmers sold them to another company, and then that company merged with another company that was ASX listed called Shopley. So even though I have here ASX listed since 1999, that was a completely different company. In fact, that was a completely different few companies called Swish, Effective, and then Shopley. So there was a merger between Shopley and Harris Technology's owner back in, I think it was 2017. And then they decided to sell off that original business that owned Harris Technologies, and then they changed the name to Harris Technology. So obviously, the people who owned Shopley and wanted to merge with Harris Technology and the original owner thought there was more promise in Harris Technology. The current CEO of the company is Garrison Huang, who has been in this role since July 2016. He also owns about 30% of the company, and among the larger shareholders of Harris Technologies are just individual investors. No fund managers are interested in this company, which is understandable because the current market cap of Harris Technology is $5 million. That's at a share price of 1.6 cents. Share price has been lower than that recently. But again, market cap of $5 million, which is interesting when you look at the December quarter report and their operating cash flow number. And the ticker code for this company is HT8. And here is their December quarter results. Pretty nice results for the company. Receipts to customers, 6.7 million. And the company was operating cash flow positive by $1.3 million. For the first 6 months of the financial year, they were operating cash flow positive by $1.3 million, which means in the first quarter of the financial year, they're actually operating cash flow negative. Now, they don't spend a lot of money in financing and investing activities, so a lot of that cash flow went to the bottom line. So the cash on hand actually increased from 2.1 to 3.1 million. Now, there is also the possibility, because we don't know changes in working capital, but maybe they sell down a lot of their inventory, and that's a cash by selling down the inventory was the reason why they were operating cash flow positive. So we won't know why they were operating cash flow positive until we see the half-year results, which they should release in the next few weeks. But I probably do think more than likely there were some changes in working capital that was favorable to Harris Technology for this quarter. So even though it does look impressive for a company that has a market cap of $5 million, don't go running out there and buying shares in this company just because we don't know those changes in working capital just yet. Another interesting aspect of Harris Technologies is just their receipts history. Over the past 7 years, since the September quarter of 2016, back then in 2016, 2017, this company had receipts of about $15 to $16 million. And then for some reason, over the next 2 years or the following 2 years, receipts fell from about 15 to 16 million all the way down to 2.4 million in the end of 2019, start of 2020. So that was not because of COVID-19, because COVID-19 was in the first few months of 2020. And then we saw a massive run-up in receipts because of COVID-19. People working from home, they needed that technology stuff like printers, computer monitors, iMacs, that sort of thing. And so Harris Technology saw their receipts go or climb from 2.4 million to a high of 15.8 million, which was a record quarter for this company back in the September quarter of 2021. But since that record quarter, you can see the receipts just been dropping every single quarter. Receipts have dropped from 15.8 million to 6.7 million. So this drop in receipts over the past 6 quarters is a concerning thing for me and maybe for the market as well, because the market has driven share price down a fair bit in that time period. Now onto the chart for Harris Technology, and this is the weekly chart going back to June 2019. And back in 2019, no one cared or was interested in this company. Share price was hovering around 1 cent, no volume. But the market became interested in this company in April 2020. We saw massive volume coming in. Share price increased significantly in 1 week, and then it kept on climbing during 2020. Now, the share price actually increased from 1 cent in January 2020 to a high of 22.5 cents in about November, December of 2020. So 2020, this was a 22 bagger. So in 1 year, if you bought shares in this company at 1 cent, you would have had a 22 bagger, and hopefully you would have sold out your shares, because from that high towards the end of 2020, share price has dropped from 22.5 cents all the way back down to 1.6 cents. That's all I have for this look at Harris Technology and the December quarter Appendix 4C. They were operating cash flow positive and with a valuation of only $5 million. If the company can keep this momentum going, if they can report a few more operating cash flow positive and free cash flow positive quarters, this company would be looking awfully cheap. But there's a lot of things to dislike about Harris Technology as well. And the main things I'm thinking about is, where is their competitive advantage? What moat do they have over their competition? What differentiation do they have from Kogan, from Amazon? Although it is interesting that they do sell on those platforms. But if they can maintain this operating cash flow positive and free cash flow positive, a markup of $5 million does look a little bit enticing, but I'm a little bit skeptical they can continue this sort of quarter in the next few quarters, particularly with the decreasing cash receipts this company has seen over the past 6 quarters. If you are a Harris Technology owner, I would love to hear your opinion on this company and why you did buy shares in Harris Technology. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.